How's it going, guys? Welcome to another video. We're going to be going over a nice double dividend strategy, one of my favorite strategies to do for receiving monthly dividends. So we're going to be using this on the sphd ETF, which is the S&P 500 High Dividend Low Volatility ETF by Invesco. A very, very solid ETF, and it's very, very stable. As we can check on the 1 year, it doesn't really move too much, but it does track the S&P 500, the highest dividend, low volatility companies. And as we can see, it's been doing pretty well. Since it is taking out stocks and companies from the top 500 US companies, these are going to be solid stocks inside of this ETF, which is very solid for us. So if we take a look at what exactly this is holding, it's holding a lot of very versatile, diversified companies. We have a lot in the utilities, consumer staples. We also have real estate, healthcare, energy, materials. We're diversified. So buying and holding this ETF is going to be a very good investment, in my opinion. It's very safe. It's not very volatile, as the name implies. And overall, it's going to pay out monthly dividends. That's the main thing that we're looking for. It's these monthly dividends, which allows you to compound your investment a lot quicker than quarterly dividends, because you can reinvest it back into the ETF. So this strategy, what we're going to be doing is buying 100 shares, which is going to cost you $4,500. And buying and holding 100 shares is going to allow you to capitalize on the nice dividend yield of, I think it's 3.88%. Yeah, annual dividend yield of almost 4%, which is pretty sweet, and it's paid out monthly. So take a look at the distributions. We're receiving about 14 cents per share every single month, which is pretty sweet. And if you have dividend reinvestment enabled, you can continue making that nice monthly dividend income. Very, very passive, just buying and holding shares. And especially if you're adding monthly contributions on a recurring plan, you're really going to see some really good growth in your portfolio just by this one ETF. It's pretty much all you need for some stable dividend income. So we're going to be utilizing the strategy with options. So let's head over to the options chain. If you're not familiar with it, if you own 100 shares of a stock, you can sell some covered calls. And covered calls is going to allow us to capitalize every single month, even more income. So what we can do is, as we can see, there's a few expiration dates. It's every month or so. We're going to be doing the April 14th expiration date, which is about a month away from now, a little over a month. And we're going to be doing the furthest one out here, the $49 strike price. And we're going to be receiving $18 of premium for selling this contract. And our chance of profit is 89%. How we lose on this trade, basically, if sphd goes above $49 per share, say it goes to $50, we have to sell our shares at $49 each. Now that's not bad considering the current stock price is $45, so we're making a capital appreciation of $4 per share. And since we have 100 shares, we're making a $400 profit, which is pretty sweet. And then we can continue in buying more shares and selling more covered calls every single month. So as we can see, $18 of credit for selling this contract expiring in a month. And that combined with our distribution of 14 cents per share, and we own 100 shares, that's going to be $14 per month. That's going to be about $32 every single month per 100 shares. So now let's say you have a little larger portfolio, little tens of thousands of dollars, and you have 1,000 shares of this ETF. Which is going to require about $45,000. I do have that in my account, fortunately. But let's say you do have that $1,000 shares of this ETF. We're going to be making $320 every single month, which is pretty sweet. And it's going to allow you to take yourself one step closer to retirement. So people with $500,000, they're making $3,200 every single month using this strategy, and it's going to compound really fast, because if you if you reinvest your dividend income back into these ETFs, you can allow yourself to sell more covered calls, receive more premium for your options, and overall you're going to be growing your wealth pretty fast, which is going to be pretty sweet. So SPHD, even if you don't want to do the options, buying and holding shares for a 3.88 annual yield that pays out monthly is going to be pretty sweet, and it's going to allow you to reinvest it, build that compound interest, and overall become a millionaire in a few decades, honestly. So that's about it for this video. Thanks for watching.